All right, I think it's exactly 2 p.m. and let's get started. I just have one quick request to all of you. I've provided phone coordinates here for audio on the chat window. If in case you have any trouble hearing me, if there's, because computer audio sometimes gives trouble as connected on Wi-Fi or your data. But if you're able to dial into the phone coordinates that I've provided, it's a local Canada number. You could hear me very well. So just in case you need it, please go for it. Okay, so today's topic for the webinar is, as you all see in front of you, Law Society Bookkeeping Compliance. And it is accredited for 1 hour CPD credits across provinces in Ontario, British Columbia, New Brunswick, and Alberta. I request you all to make a note of this topic so that you can go into your respective Law Society portal and update for the 1 hour credits. Okay, so the topic is pretty vast, so but as important as it has to be addressed. So I'm going to be, the next 60 minutes, we're going to be talking about how to get this topic interesting, at the same time provide importance as per Law Society guidelines. On today's agenda, as you all see here, we will be able to address the important documents that is required by Law Society from a legal practitioner on monthly or yearly basis, as some provinces needs to maintain it on a yearly basis or submit it on a yearly basis, let's say Alberta, and some, like Ontario, British Columbia, you're required to maintain monthly compliance documents. So when I mean monthly, it could also be for your internal purposes. Let's say, for example, HST documents, even though they're not mandatory to be part of compliance, but it's going to be helpful. So we're going to be not just discussing the trust or the general ledgers that's required by compliance, but a little more than that, so that your bookkeeping, end of the day, is required for all of these purposes. So on today's agenda, very clear that we're looking at about 8 to 12 documents that's required by Law Society to maintain your books, starting with trust and general ledgers. So you have 2 ledgers, 4 journals, that is Trust Receipt Journal, Trust Disbursement Journal, General Receipt Journal, General Disbursement Journal, followed by reconciliation documents. That is, if you have trust, a trust reconciliation document. If you have general, which is where most of the companies, of course, needs a general account or a business account or operating account. That is more like unavoidable. You will need a general account to get started with, but trust is at your own discretion, whether you are planning to get retainers from clients, or whether yours is a real estate practice, or whether you will need to basically have a trust account in place to get your practice started. So reconciliation documents, you will need a couple, so that brings it to 8 documents so far. Besides that, there are other statutory documents, even though they're of general in nature, let's say like fee book or Form 9A, whenever you're making any transfers from trust to general, These are part of other compliance documents like deposit slip, Form 9A, fee book, expense book, etc. So we are going to be looking at about 8 to 12 documents today, and we will be spending a little bit of time going into details about it. So I have a chat here asking name of the webinar, CPD hours. So name of the webinar, I'm again starting here, Law Society Bookkeeping Compliance. This is the title for the webinar. I request you all to make a note of it, and I will certainly be entering this towards end so that we have everybody joined in and all of them can make a note of it. So Law Society Bookkeeping Compliance is the title, and you are entitled to 1 hour CPD credits, professionalism CPD credits. All right, so these are the 8 to 12 documents that we're going to be seeing today, the requirements mandated by Law Society. At the same time, how do you perform certain actions to produce these documents to Law Society? In other words, what is the process that you would be following to keep your books regulated and matching with your financial institutions records, that is bank statements? Basically, keep a record of what happens in your bank and also reconcile them from time to time and produce all the other reports along with it that we just mentioned. So it is great for all of us to have very strong internal record system for maintaining the books. Some tend to use the traditional method of paper pen method. Some use Excel spreadsheets, and some use a legal accounting software. So it all boils down to a point where are you using an effective and an efficient method to make a record of your accounting transactions, and at the same time you're able to spend that time over something else of useful nature to your business or your practice, etc. So that last point here talks about last 2 points rather talks about how seamlessly you make a record of these transactions, what is the time you're going to be spending doing it, and how do you do it? Like I said, what is the method that you're using to record these transactions? As legal practitioners, you're required not only to maintain client records, which is, let's say, any money that comes into trust in form of retainers or any settlement payments or any real estate transactions, if you're a real estate lawyer, or any disbursements from your trust, but you're also needed to maintain your business or your practice expenditures, other income, that allows you as a legal practitioner to arrive at a profit and loss by end of the year, saying this is the revenue that you've generated from your legal practice, and this is the expenses that you have recorded. Could be disbursements, could be office expenses. But end of the day, it's also generating a P&L report for your own internal purpose so that you are aware where you as a legal practitioner stand and where your firm stands in terms of making a profit, and you would be able to allocate expenses and reduce your expenses, be more careful about practicing. So bookkeeping not only helps you to keep your compliance on track, but it also helps you beyond that unknowingly if your data entry is in a timely manner and appropriate, more accurate, so that end of the day, the reports that gets generated are helpful for you for internal as well as external purposes. So this is what we're going to be talking over the next probably 45 minutes. And how do you generate each and every document without any flaws in it, at the same time without any discrepancies, as it is very important to have a very straightforward accounting system which is helpful for you as well as your accountants or your auditors or the regulatory bodies that are going to be witnessing it or going through it, or well, you submit it to them. So the accounting system that really matters here are like pretty basic manual double entry system, or could be, like I said, a Excel spreadsheet, or any general accounting software, maybe like a few on the market. If you Google it, Google would be able to tell you that with a few points that you have typed, this is what we are able to produce, and this is something that is close match to what you're looking for. But end of the day, if you're a law firm, we always recommend a legal accounting software that helps you to churn out documents for Law Society as well as for CRA regulations and for internal purpose or for your auditor. But the end goal is met with just 1 point data entry, and end of the day, you should be able to provide documents that gives you more details as to whether this was your data that has been received from your client money, let's say the client trust ledger, or the client paying into your general account directly in regards to client payments, and the respective journals as to whether you have raised a legal fee and the client is paying you for it, or whether it's going to be towards a disbursement. Everything needs to be streamlined and in an order that you should be able to consider what will be best for your practice. The purpose of built-in application is to allow you to do the legal accounting without any big efforts. When I mean any big efforts, big or small differs and varies rather between each type of person or at the aspect of it. Something big to me could be small and vice versa. But when I mean the purpose literally here is to allow you to do the data entry in a timely manner, and the program should be able to avoid or disallow you from making any mistakes, or rather it shouldn't be allowing you from making any mistakes. For an example, let's assume your trust account has X amount of dollars in it for a client, and you're trying to transfer, for example, you have a $2,000 lying in your trust for client A, and if you're trying to move that fund from trust to general without invoicing, it is a violation. It is a trust violation. A good software or a good practice shouldn't be allowing you to do that. As you all know, money from trust to general can be transferred only when you can invoice the client for either the specific legal fee or for the disbursement. So the necessary warnings, checks, and balances just to stop you from making bad decisions and allows you to do the right thing is very important. And adding to it, it should also allow you to basically avoid any overdrawing from trust, as that's another part of violation when you take trust as an example. I know I'm emphasizing here more with trust because we all know trust is very sensitive area. Trust account rather is a very sensitive area to be looked into. And that is what is Law Society also more concerned about. And that is why we have this session to enlighten you with a few additional details as to what would be a best practice to keep you compliant with your books as per Law Society guidelines. So a manual double entry, very important. When a client pays you a retainer, quickly enter that in your trust account. And when you have to move that from a trust account to a general account as a part of trust transfer, or remove that money from trust to pay some part of disbursement, the double entry plays a role here, as every credit has its respective debit, and you will have to record it simultaneously. Now, credits and debits, I know we all are very nervous when it comes to a little more complicated accounting terms, but I'm sure that we're all more aware about these terms like deposits and withdrawals, right? Sometimes even for an accountant, if you're not having any, let's say, big accounting background, but I'm sure the banks and the statements that banks provide you with are very clear with saying deposit and withdrawal. So when you have a deposit into your trust account, you should make sure that you have notified the client, first of all, that you have received the payment. So provide them with a receipt. That is the best practice to do. By providing them with a receipt for this payment that you've received, two things are covered here. Number one, the client is aware that you've received the money. And number two, as per Law Society guidelines, let's say receipts are very important. The deposit slips and payments that you've received into your trust or general are equally important. And it's also time consuming if there's a large number of transactions that are to be entered at each different time. Rather, it's more simpler when you're going to be entering it at the same time. When you receive it, when I mean same time, at real time, when you receive payments, try to record it immediately into that specific file. A client might have various files, but let's say the same client has two files open with you, but specify if you receive a retainer, whether this goes or gets distributed into both the matters or files equally, or whether this is specific for the current file that you're working on. So it's very specific to the client and the file that you record such receipts and withdrawals from the respective accounts. And this, in turn, allows you to manage your trust more efficiently. When you're using a spreadsheet software, we all know that we try to replicate what happens in our bank with a date, with a particulars, with debit or credit, let's say debit, deposits, withdrawals respectively, and with a running balance. It's recommendable, but it's more time consuming. You're basically entering the same data at 2 or 3 different places. And end of it, you're going to spend more money having to do some calculations, and they're also not automatic. That is when a general accounting software or a legal accounting software plays its role. As you all see, it's very important to find the model that suits your time and your budget. Making sure that you found the right accounting software is definitely one of the key points to note here. Depending upon the firm size, depending upon the model that you're looking for, whether I'm more inclined towards an accounting software for general accounting or for legal accounting, is something that will help you decide whether this has helped your data entry or not. Besides that, bank accounts are also created based on your practice nature, keeping in mind whether you operate trust or keeping in mind you also operate, you only operate general to record your client payments and receipts or withdrawals are very important. Most law firms, like I already mentioned, will have at least one general account and one trust account. Some tend to have multiple trust accounts. If you're a real estate lawyer, you would know this better. And they're required to maintain compliance, follow the same steps that we're discussing for one trust account for the respective trust and general accounts that you have, even if it's 2 or 3 that you maintain. Now, moving further, now that's about what we are going to be seeing today. So moving to the next slide, what are ledgers? It's own bookkeeping compliance that you have for the Law Society guidelines that's laid out. You have to follow what your specific law society for your province is laid out and try to maintain them on a timely manner. So the trust and general ledgers, the templates that you are typically seeing here on the screen, the client's trust and client's general are what we're going to be talking about now. So every transaction that is recorded into the system or into your software, like could be a spreadsheet, needs to be recorded in one of the both ledgers. Ultimately, the client is either paying you into the trust or the general, sometimes could be both. A client could start with a retainer, so that's a receipt into trust, and a client could then move on to general after you finish the work, raise an invoice, and pay the balance amount into your general account. Or even with the case of disbursements, sometimes the disbursements could happen from the trust account directly, or you might disperse from your general account and get it transferred from trust to general with an invoice for your legal fee. So each ledger has its own particulars and importance of recording such items. Kindly follow the bank. Make sure that every item that is recorded in the respective journal or ledgers are being followed and matched with your bank. Have a separate file for each of your clients. In fact, each matter, I would say, because some clients, like I already mentioned in last 5 minutes ago, can have separate files for the work. They could have 2 or 3 matters ongoing, but you will need to make sure that their records and accounts are maintained separately. So have a separate file for each client and matter, and try to capture the data on time, real time, in fact. that would be more helpful. Like you see here on the ledgers, if this mortgage advance of $40,000 on the left-hand side, there's a screenshot for client's trust ledger. So this means for Kim, regarding loan to Taylor, mortgage advance was received into trust. Hence, you have a $40,000 receipt under receipts column. And eventually it got transferred out of trust. So when it got transferred, the particulars are very clear here with the description saying that it got transferred to Taylor. So it is a loan from Kim to Taylor. Hence, the receipt and the disbursement that you see here with a running balance is very evident that the client had $40,000 in trust and it was eventually disbursed the next day and left out with $0 balance in trust for this client. So a timely manner of data entry matching with your bank is a key point here to note. I would say that solves 50% of your problem. If the dates match with your bank date on your records, your reconciliation of books is much simpler. Because on that date, you will go back and track down on the items or transactions that occurred in your bank, and you will be able to pull out the transactions to match it and reconcile it, which will be more easier. But now let's say you have received this amount into bank as on August 30th, but you have recorded it in your program on October the 1st. It's not going to be reconciled, number one. And number two, you're going to find it hard to identify or match this transaction as you would be looking at your bank statement for August, and the transaction in your program will be sitting in October, which is nowhere in your vicinity of search. So it is very important to keep your date of transactions in mind and also accuracy with amount and other particulars. Now, when compared to that, you also see the client's general ledger on the right-hand side, which talks about the fees or the revenue that you've received against the legal fee invoice that was raised on July the 2nd. So if you see, there are the columns that's matching already, like some of them like date, particulars, the account details, but there are also more added to client's general because a general ledger is more prone to disbursements. Even though you can disperse from trust, there are some expenses or disbursements on behalf of client that occurs from general account. So the first column, the third column here signifies that, followed by any fees, legal fees that's billed to the client for the work that's done, and the corresponding HST. Because for every province, there is the respective HST, PST, GST, so I would say respective taxes that are collected and paid to the government. So fees followed by the taxes and any payments from client received into account on the second line item you see here on July the 22nd is the corresponding deposit that you've received into your general account. So the concept of double entry, for the respective debit, you have a credit, and the balance, that is running balance, is also seen here very clearly. When you raise a legal fee, the particulars are entered on the client's ledger, general ledger, saying that the legal fees has been for the invoice number so and so, which includes details of the fees that you're charging them with the taxes. So you're also able to see before taxes, and after taxes as the balance owed, and corresponding payment that you have received from the client. Everything is recorded in a ledger from all aspects of it. And when I mean all aspects, there could be different aspects as to whether it was a client expense. And the client's general ledger also includes any expenses that is made on behalf of them. And the method of recording, it is eventually reported on the ledger that you see here. So following are the samples that you see here from Law Society that we just discussed, demonstrates a client's trust ledger and a general ledger. I'd pause here for a minute to see if you all have any questions. We are 30 minutes into the webinar. Topic for today's webinar is bookkeeping compliance as per Law Society guidelines. I will enter the topic title name here towards the end so that it will be helpful for you to make a note of it for receiving credits. If you have any questions, I request you to leave it on the chat and I will take it towards end. Now, so far we've discussed the two important documents for Law Society compliance, the trust and the general ledger. Moving on to the journals, the other four documents that we spoke about in the beginning of the session. So journals records every single type of activity that has taken place into the respective accounts. There could be any payment into trust, any withdrawal from trust, any payment into general, any withdrawal from general. So all of these are recorded with the method of payments, with the exact date and the particulars and sources of funds. So there are four types of journals that Law Society would like you to demonstrate and keep a copy of it. Trust Receipt Journal, Trust Disbursement Journal, General Receipt Journal, and General Disbursement Journals. If you look at these journals closely, I will start with, let's say, trust, again, being the sensitive hot topic here. Trust Receipt Journal, the top left one, everything that's common here for all the four journals that you see is definitely the date and, of course, the amount. But there are some additions and deletions depending upon the software that you use, depending upon the program that you use, rather, and the method of payment or other client details and sources of funds are also captured and recorded here depending upon the program that you use. If I take the example on the top left for Trust Receipt Journal, when you receive payment into trust, it is captured and recorded, like I said, in a timely manner for the date on which you have received into your financial institution. And it's more important to enter the source of funds, as Law Society requires you to do so. And the source of funds could be from the client themselves, or sometimes from the spouse, or sometimes from their children, sometimes from other party. So it's very important for you to record the source of funds, because naturally you will be issuing a receipt upon a payment that was received. Along with the purpose of funds, whether this was a retainer or whether this was a settlement payment that came into trust, or whether this was anything to do with other deposits, like let's say it was a real estate transaction and there was a mortgage fund that came into your trust account and was immediately dispersed to either the clients as part of refinancing, or could be as part of let's say vendor payments, etc. So it's very, very important to record purpose of funds, nature of funds, and along with the amount and the method. Now, the method could be various methods of payment that you could receive. Sometimes you would receive an email transfer or an electronic fund transfer, could be check, or it could also be a credit card payment sometimes into your trust directly from your client, and the credit card company, or rather your payment integration company could be taking out the money from your general account for the fees on behalf of the payment that you received into your trust through credit card. Let's say, for example, Square or anything else like LawPay, etc. So it's very, very important to drill down to these details, such as source of funds and purpose of funds, as well as the method of payment, as it will be helpful and easier for you to track down these details while reconciling. And let's say you have a check that was deposited into the bank but was never recorded in your books, or it could be vice versa. You've already received the check in your hand, recorded it under the client's trust receipt journal, but then you also missed to deposit that check into the bank. And then when you look at this record here on the software or the program that you're using, eventually you will be able to understand that there was a $1,500 check that was received for Peter Piper, but was never deposited into the bank. So your bank is low by the $1,500, and it acts as a trigger point for you to deposit it at the later date, and then probably change the transaction date in your books as well. So remember, the dates are very important, and it should be matching with your bank, unless otherwise there is something outstanding as in terms of withdrawal or deposit. Now, proceeding further, the same applies to General Receipt Journal, where when you receive payment into your general account, it is very important to record the source of funds, the method of payment, amount, as you see here on the screenshot. So it could be in terms of your source of funds, that is probably for client payment, or it could be a transfer from trust to general, or it could be for any disbursement that was made too. So the purpose of funds, source of funds, and the method of payment is very, very important. As you see here on the journal, how the data has been captured. And when you come into the disbursement mode, these receipts gives you a foundation as to where the money was taken out and dispersed from. You see here on the top, we spoke about receipt journal, and the bottom talks about disbursement journal. And there are both trust disbursement journal and general disbursement journal again, which talks about the method of payment, paid to, and what was the purpose. It could be for dispersing your legal fee from trust to general, which is a trust transfer, or it could be for a simple disbursement to pay the application fee or court filing fee, or even having your client expenditures dispersed, but making sure that no general account expenses or no office expenses are dispersed from your trust account. But at the same time, if you see the left-hand side, the right-hand side bottom, which is the general disbursement journal, you could see both payments from general for dispersing your clients' expenses. At the same time, any disbursement for your own office expenses could be for office supplies, could be a landlord rent, or rather rent paid to landlord. It could be for any different purpose on the general account, as Law Society doesn't lay out any rules on general account because it's an operating account, which is also operated for business purposes. But trust being purely maintained for client receipts and client disbursements alone, and of course, transferring any payment from trust to general. All right, so that was about the 4 journals, the importance of recording information under the respective journals, the trust or general, receipts or payments respectively. Now, moving on to the next one, we're talking about reconciliation of trust and what makes you do it faster and more accurate. As we all know, trust being a big sensitive word that we're using here, trust bank reconciliation is something that needs to be complied with on a monthly basis. If you have a trust account, you need to make sure every 25th of the month, every end of the month, you're getting your trust reconciled. To be precise, like I said, every 25th of the month, you will have to reconcile your trust account for the previous month end, 30th or 31st. As you see here on the right-hand side with the screenshot that's showing you how the trust bank reconciliation is broken down into 4 steps. Our program or any legal accounting program that should focus on is reconciling trust or help you reconcile the trust by following the right accounting procedure and also making sure that your transactions that are recorded there are on the accurate date and time. When I mean time, you're not in the literal sense the time is recorded there, but your date of recording it is very important. Date and year, both. The activity that you see here for reconciling trust includes 4 steps. Recording of bank statement and balances, as you see on the top, balance as per bank statement, followed by recording any outstanding deposits and ensuring that any withdrawals that is outstanding is also marked so that all outstanding are to be cleared on the respective dates. And recording of client's trust listing is very important. End of that month, what is the balance that this client has in their account, whether it has been invoiced or whether it is sitting in the trust. That will give you an idea to revisit that client's file and see whether you have missed to invoice and transfer it from your trust to general. So repeating the activity that consists in the trust bank reconciliation. Step 1 being recording all the transactions that you have done on the respective dates and ensuring the balance as per bank statement for the date on which you're reconciling. Let's say, for example, July the 31st or August the 31st, that as per what you're seeing here on the screenshot. Followed by the marking all your outstanding deposits and withdrawals. And importantly, if there is any error or omissions, bank error specifically needs to be recorded. So that will help you reconcile the account, trust account, as per your bank and your records matching it. And end of the day, a trust comparison is generated. And if you see the step 4 at the bottom, you see the reconciliation above and the trust listing above, the 2 items that you see on the step 2 and 3 respectively, or rather step 1 and step 3 respectively. You're able to arrive at a trust comparison and understand what is outstanding, what is not cleared, and what needs to be cleared or moved from trust to general. And if there are any mistakes in terms of errors or omissions, it needs to be replenished back into trust. For example, if a bank charges you with a bank fee, they will have to deposit it immediately back into trust and debit your general account with the same expenditure or bank charges as an office expenses, since your trust can only be debited with client-related transactions and not any general fees or charges. Now, with the last 10 minutes remaining or 15 minutes remaining, I'd like to talk about the other important documents. So far, we've discussed 2 documents on ledgers, 4 for journals, and 1 for your trust reconciliation, and 1 for general reconciliation. That gives you about 8 documents that Law Society requires you to produce. It could be 7 if you don't have trust. Now, there are other documents as well that Law Society recommends you to, or rather mandates you to generate, like Form 9A, fee book, and could be deposit slips that we are going to be talking in the next couple slides. So fee book, as we all know, is in regards to the legal fees that you bill the client for, and it records all the invoices along with the disbursements that's being billed and what the client owes you or what is probably shown as an AR or collectibles from either the client or from the trust account to the general account. Fee book also records other items as you see here, invoice numbers, whether there is any HST on the fees, because some clients or some legal practitioners are not required to, are still not eligible to charge taxes. Maybe they've just began their firm and they're literally within the limitations of taxes not to be charged. And when you look at HST column or taxes column, you would rather see that the HST or PST or GST that you billed for is maybe 0. And the total that you've billed for and the fees billed will be matching. So following is a sample that you see for a Law Society fee book that Law Society recommends you to maintain with a client details, invoice number, fees, and the taxes with the total bill. Of course, if you have disbursements on that invoice, that will also show under the respective line item. The other compliance documents are as you see here, are electronic fund transfers. In Ontario, legal practitioners are required to maintain or produce this Form 9A that requires them to keep an electronic trust transfer requisition form for every trust transfer that is done electronically. Along with it, there are other documents like cash deposit slips upon a payment that's received from a client in form of cash or a deposit that's being deposited into the bank. A record needs to be maintained in the form of deposit slip into the trust account or general respectively. A deposit slip is what you look at, the second one at the bottom from the left. And other examples like having a duplicate cash receipts and other verification documents such as the client ID verification, etc., are also part of a compliance documents, but that falls under the matter management, but it is equally important to maintain them for your books. So remember to not just maintain the first 8 to 9 documents, but the other 3 to 4 are also equally important, like the Form 9As, deposit slips, and the other duplicate cash receipts that you are seeing, like fee book and expense book, etc. Now, so we've discussed about 12 documents overall, including fee book, expense book, the 4 journals, the 2 reconciliation documents, the 2 ledgers, and the Form 9As, etc. So there are about 10 to 12 documents that on a monthly basis Law Society recommends you to produce. And towards the end of this session, I'd like to remind you all to make a note of how much time are you all spending on managing all of this, and how do you benefit out of your accounting practice while doing all of this. So every entry is very different. Some of them are very similar, like say all receipts have a similar nature into trust. All journals that you're going to be doing could have a specific set of nature, but at the same time, they could vary with information such as date, method of payments, amounts, which are to be maintained with high professionalism, accuracy of data, and timely manner of entering such information into the platform that you're using or into the method of software. Could be an Excel or could be a legal practice management or in a general accounting system, making sure that the same information is recorded at only the respective ledgers and journals and not duplicated or not recorded several times, just making sure that you are doing the repeated things again and again without any data that is being transferred to you in form of ledgers or journals. So if you are looking for one such practice, we highly recommend you to go with a legal accounting software that helps you keep a track or record of these at one point system where you are allowed to enter at the client level or matter level and have it reflected on your respective accounting ledgers and journals for your reconciliation and Law Society compliances. So for a seamless accounting, practitioners use to matter management, and translating the matter management workflow to seamless accounting is the key to saving time, preventing errors, and making reconciliation simple, like I just said. Having a specific file and a matter managed to having this recorded into the respective journals and ledgers to make the reconciliation simple while recording the data when the event happened and automatically maintaining the ledgers and journals with the workflow keeps your accounting data and bank records absolutely matched to the closest possible. Last but not the least, benefits of a legal accounting software. We all know that it allows us to record the events then and there and when and as they happen. Recording financial records and bank records as close as possible to make the reconciliation simple. As I always tell my people that make sure to do the data entry as and when the event happens so that you are not lost into weeks and months trying to find out where the data is, how was it paid to me. If you're not having a proper financial institution that provides you with the method of payment you received or with the transaction receipt number, then it's even more troublesome. As some of these financial institutions does not give all the details on their bank statements, and sometimes you're not able to go back and collect bank statements for online, at least for a specific period of time. So please make sure that these transactions are recorded on a timely manner, making it as close as possible to reconcile trust and general simply. Finally, we all know it's about compliance, accountability, because we are accountable to Law Society about the client funds in your trust. And at the same time, for your analytical purposes as to what was the revenue that is generated from this year's legal services that you have provided with, as well as with your other income that you have generated and etc. for your analytical review of your firm and the ease of use. With this, and with last 5 minutes remaining, I'd like to take you into our program and show you how seamlessly the compliance documents are generated with the details. For example, when you take compliance tab under accounts, you would find monthly compliance there, and everything that you need for Law Society is provided here. I'm only quoting you an example here. There could be several other platforms that provide you with similar data, but I'm choosing uLaw as one of the legal practice management solutions or softwares that allows you to do accounting in a very seamless manner, enabling you to download the documents that Law Society recommends you rather to download and to keep a copy with you and also produce to them as and when required. So if I take an example of an expense book for, let's say, a week and show you how the expenses are recorded on expense book, you would see it very clearly here that there are some of them that is an expense on behalf of the client, and some of them are probably your office expenses. And it is very clearly shows that if there is an expense that is recorded on behalf of your client, you would see it as a disbursement under the description. And if it's for your own company or practice, you would see that as part of your office expenses. So the journal and ledger transfers all the data into the respective documents that Law Society requires you to provide it with. And one such is expense, which shows you what you've expended on behalf of the client and what you have collected as taxes and what you are supposed to be remitting to government, and the total of the specific period for expenses with taxes is provided under an expense book. If you go back, you're also able to see Form 9As. That is very important for your transfers from trust to general in format of electronic trust transfers. Again, this gets printed with all such details that allows you to depict to the Law Society saying that this was my transfer requisition number for this amount, for this client, for the purpose, whether it was in a disbursement or whether it was for a legal fee or for both, and the debit account and the credit account with further details. So this is an example of Form 9A with, let's say, I want to end showing a couple more documents like fee book and journals. When you take a fee book, let's say you want to see the legal fees with the taxes, you will be able to see that this is your legal fee charge for the client on this date with the description and the invoice number with the amount of fee you're charging plus the taxes and the total. This is the list for the period that you're downloading it for along with the total. And this is coming in from your trust receipt journal as part of, could be for trust, could be for general, but depends because the legal fee is an AR once you raise an invoice. So it's coming in from your general receipt journal upon making a payment. Lastly, I'd like to show you how a client's trust list looks like. So I would download it for a week and show you for this period how you could see each of the client's trust activity with the client account details on the top, with the file number followed by the date, particulars, and the amount of receipt and disbursements, whether it was a direct disbursement or a transfer from trust to general, with the running balance is seen on this document for each of the client. So this gives you a better idea of what has happened in trust account for this specific client. All right, so that's something what we had for you in the last 1 hour in terms of showing what makes you a better legal practitioner by maintaining the books as per Law Society compliance. I'd like to open the floor now for any queries, and I could take some chats now. We have some important links posted. I request you all to look at it. And I also would like to thank you all for joining today's session. The topic for today's session is Law Society Bookkeeping Compliance, and it's accredited for 1 hour CPD credits. I'll enter the topic here on the chat for you all to make a note, and I'll stop the recording here so that there's less to refer in the future.